morning. I'm Scott Gentry from Brave New Coin, and I'm with Norbert. How are you today, Norbert?
Very well here. We're live from the Team Z Blockchain Summit today.
And we're here with Travis Kling from Ikigai Asset Management. And welcome to the land of Ikigai.
Gentlemen, thank you for having me. Happy to be here.
You've been to Japan most recently, in January, is that right?
Yeah, this is my third trip in the last year. So not quite a regular at this point, but love it here. Love the Japanese culture. I think Tokyo is probably the most impressive city I've ever been to in the world. If I tell people, if you think New York's a pretty crappy place before you go to Tokyo, try going to Tokyo, and then you realize they got more people than New York, and it's so clean and so quiet and so organized and so just well put together. I love it here.
In spite of the background music. But it is also cherry blossom season, and you are here just before the new Reiwa era. Are you familiar with the Reiwa era?
I don't think so.
Oh, okay. That's going to be the name for the new emperor.
Ah, yes. Okay.
We're just leaving the Heisei era.
Okay.
As of May 1st.
Got it.
So, anyway, just this stuff about Japan. It's obviously you've got a Japanese name for your company, Ikigai. I've heard you talk about that in the past, what the origin of that was. I haven't actually heard how you came up with the exact name.
Yep.
Can you just where did you hear this?
So I came across the concept just randomly in an article months before I even left Point 72. Wasn't even thinking about. I was starting to go down the crypto rabbit hole, but I wasn't even thinking about starting my own fund at that point. And then fast forward probably 6 months, and I was at an ICO conference in Cayman Islands in February of 18, and that was right when my now partner Timothy Lewis and I were really starting to circle up around like we should really think about doing something ourselves. And one of the presenters at the ICO conference, that the Venn diagram that people kind of, if you Google Ikigai, you see this sort of Venn diagram, and it was in that presentation, and so it like sort of rejiggered my memory, and I was like. And then because I was sort of like thinking about, starting a crypto fund, just right then I was like, oh, that'd be a great name for a fund. So
Okay.
it has the personal significance of it is, so the Venn diagram, if you Google it, it's what you're good at, what you like to do, what the world needs, what you deserve to be paid for. If you get all four of those things, they say it's finding your Ikigai. They say one of the reasons why people in the Japanese culture live so long is because they have this sense of purpose through Ikigai that's introduced. And, whether you're the CEO of a $1 billion corporation or you're sweeping the floors, if you can find purpose and meaning in your life on the day-to-day basis, it's the kind of thing that helps you get out of bed in the morning. And, personally for me, I had a career in hedge fund investing, and I like doing it. I was pretty good at it. I made a fine living doing it, but the world doesn't need another hedge fund manager. And if the world doesn't get another hedge fund manager, the world's going to be just fine. But the world does need this technology, and this technology is a platform to go drive societal change for the good. So I felt like taking a skill set that I had developed through my career and something that I feel like I'm pretty naturally, like there's a lot of things I'm not good at, a whole lot of things I'm not good at. I'm a pretty analytical guy, and I have a tendency to sort of veer towards economic logic. So
Well, let me ask you that, because I've seen some of these videos that you've done with whether it's interviews or whatever, and I used to work in the securities business, and the way you sound, you talk almost like a trader, but your logic is very much investor oriented. So what is the say decision tree that you go through? And I know you've talked about data, use of data, processes, building tools within the process, but what is it that actually gets you to the point where you decide you're either going to punt or run it up the middle?
It's a great question. So it's probably worth mentioning in my background. So I wasn't a trader. I've never been a trader.
Right.
I was a
But
magnet.
I mean, you talk like one, but your actions and the way you do things, you sound much more like an investor. That's just my opinion.
Yeah. So I'd say my background is in investing.
Right.
At Magnetar, we were not traders, and the frequency with which we turned over our book by hedge fund standards was pretty low. That certainly accelerated materially when I was at 0.72, but like I wasn't a day trader. And in fact, I personally was not the trader. I had a trader that was on my team. So if I wanted to go buy $1 million worth of ExxonMobil, I wasn't actually in the interface executing that. I would message my trader that I wanted to go buy $1 million worth of ExxonMobil, and then he would actually execute the trade. So I think stepping into crypto asset investing and seeing how, it has very much a currency-like sort of nature to how you invest in it. Technical analysis, TA, was in my prior career path was really just like the sprinkles on the couple sprinkles on the very top of the cupcake, because the cake part of the cupcake was like deep fundamental analysis of the industry that I was investing in, and understanding the entire landscape of oil and gas and energy as a whole. And maybe the icing was company specifics and understanding idiosyncratic really well and things like that. And the cherry was understanding global macro and a more quantitative risk management aspect to it. TA is just it's not that big a deal in equities. But then I kind of stepped into this arena, and it was like, okay, well, people are paying a lot of attention to this. And after going down the rabbit hole for a few months, it was apparent that it does have an effect on things. And so,
but also the data itself really doesn't have the type of history that you would have, say, in the equity market or the foreign exchange market, which in some cases you can go back to, tulips, I guess, right?
Yeah.
So
I think, to get back to your original question, I think that right now, on a short-term to medium-term basis, you do not get paid for fundamentals investing in crypto, trading in crypto, whatever you want to call it, having exposure long or short to crypto as an asset class. You don't get paid on fundamentals. For example, fundamentally, Litecoin is a shitcoin. Okay. And it is, for all intents and purposes, not a viable project. The number of active developers contributing to the GitHub has gone from 40 in 2017 to 3. But what it is a highly manipulable coin. It is very closely held. There's 63 wallet addresses that own at least $10 million worth of Litecoin. And you can't short it at institutional scale.
So too few people own way too much of it.
It's rife for manipulation. And so fundamentally, it's a great short. And if I was short Litecoin year to date, I just got completely run over. Right? So I think one of the hardest parts about being a portfolio manager in any asset class is knowing the fundamentals and knowing when to ignore them. Mm-hmm. That's hard. It's really hard to do. It was hard to do in my other job. It's hard to do in this job. But, therein lies the opportunity, I guess.
Well, you kind of touched on something there that I've heard you in the past. You're sort of critical of some of these Asian algo traders that do a lot of wash trades. And this was probably going back 6 months ago. And since then, particularly in Japan, we've seen some changes to the regulatory environment. Some revisions have been put into the new securities law or the proposed security law, as well as the overall crypto laws. So do you... Have you been following that, and how do you think that could potentially affect some of the Asian algorithmic trading practices that I think a lot of people from the outside look at this and realize it's really not good for the environment, not good for our market. We're trying to spread this out to as many people as possible.
Yeah.
So where do you what's changed? Has anything changed?
Yeah, it's short time preference actions.
Yeah.
To the detriment of the long-term health of the ecosystem. So I think specifically to Japan, I don't feel like I'm dialed in enough here on the nuances to speak specifically to Japan. Broadly speaking, there's been positive developments on that front. The market, there's been a number of research, papers and blog posts and analyses and things like that coming out about how much wash trading happens on certain exchanges, and there has now, I think, been a real bifurcation of where people know there is a lot of wash trading on some exchanges, and they know that there's less or none on other exchanges, and I think that was punctuated by this. By the Masari with the Bitwise report that came out a couple weeks ago, and the True 10, is that what they're calling it? Did you see that? Yeah, so the True 10 basically saying that this is the volume number that you need to be paying attention to, and the volume numbers reported on CoinMarketCap are such an inaccurate representation of what's actually going on in this ecosystem, and people have bang that drum now enough that, and I think CoinMarketCap is probably starting to take notice, and I would be hopeful that they will change their practices. Unclear if that's actually going to happen. I wouldn't bet on it or hold my breath, but hopefully they understand that people are starting to see. The ecosystem's understanding this a lot more, and they're realizing that CoinMarketCap is perpetuating this belief of wash trading. But specifically for algorithmic market makers in the context of providing liquidity, air quotes liquidity, for tokens on reputable exchanges, so that's still happening. Specifically, if you've been paying attention to what's going on Binance's Launchpad, so you've had 3 projects launched there now, BitTorrent, Fetch, and Seller. If you invested in those 3 IPOs, you're currently up, I think it's 6.3, 3.3, and 2.9 times your money from ICO price. You realize those gains, in the immediate gains, you realize multiple times your money in, a couple days. And then we've done sort of in-depth order book analysis, and it's apparent that by the depth and the stickiness of the order book for those 3, that they're being heavily supported by market makers. And we know that CZ keeps an inner circle of market makers close to him, and it's highly likely that he is providing those market makers tokens at highly advantageous terms, free or deeply discounted, to provide liquidity for those launchpad names. And so what CZ has done in true CZ fashion is he has entered into a social contract with Launchpad participants. And that social contract is, if you invest in an ICO on Launchpad, you will make money. Mm-hmm. Yeah. And you will make money in this fun, gamey, gambly type of fashion that Binance clients really enjoy. And so he's recreated this own little 2017 little mini ICO mania, right. But with this backdrop. With backstop rather, and you can say what you want to about the legitimacy of that, whether or not that's a good thing or a bad thing, whether or not that's beneficial to the long-term health of the ecosystem as a whole, but he's domiciled in Malta, and he has the Singaporean Sovereign Wealth Fund that's an investor, in Binance, and you can just play different types of games when that's where you're at relative to Coinbase, which just can't do shit like that. So,
And so, from an institutional money perspective that you're representing, right? Even on the Binance website, there isn't a registered address, and so you've seen Binance fleeing China, stopping over in Tokyo for 2 months, I think, before they went to Malta, and then you have these CZ pictures in Bermuda shorts and all this stuff, right? As a personal investor, I'm uncomfortable putting my money into that platform. This is what happens if things go wrong.
Yep.
From an institutional perspective, can you afford to be out of that game where you get 3x, 6x kind of returns? How do you manage that conflict?
So specifically with investing in launch pads, for example, the seller ICO, you're capped at, so I don't know so the way that the seller works is you tried to, they open up the investment period, and then everybody races and sort of clicks as fast as they can to invest, sort of like when a new pair of Air Jordan shoes are released by Nike, and you sort of race to see who can you want to buy the shoes, right? And so they've all sold out in Fetch AI sold out in 22 seconds. I think Seller sold out in 15, 20 minutes. But you're capped at a $1,500 max investment. So it's not really something from specifically is Ikigai going to invest in Seller at the ICO? It's not really sort of math that we do. There's enormous liquidity once it's opened. And so we can take our view on, whether or not we want to be playing in that. I think in terms of being on Binance, again, you would certainly like it to be, I'd say we're very cognizant of what our balances are at any given moment on Binance. And we're cognizant of that in a way that I would say we have a different set of sort of risk management parameters that we put around Binance than we do around Coinbase, for example. In terms of hacks and things like that, I think they have industry-leading security. I feel confident about that. They also, and this is important as well too, have made a tremendous amount of money over the last, they're coming up on 2 years in July, I think, which is crazy to think about, right? I think he launched in July of 17.
Yeah.
And so he's printed it, right? And so he is, if a hack does occur, highly willing, able, and incentivized to make customers whole on whatever hack happens to keep the golden goose laying eggs. Sure. And that's not nearly as good as sort of actual insurance. You'd like them to be domiciled somewhere that wasn't Malta, right. But I do take comfort in that, and I think you've seen the market start to realize that take Huobi, for example, right? They just recently had, small hack on EOS. Right. But these reputable, profitable, or at one time profitable exchanges, big exchanges, they'll announce a tweet where they got hacked, and in the same tweet they say we've made everybody whole, right? So there's that kind of social contract. I think the same. I feel the same way about BitMEX as well too. BitMEX's insurance fund, it's got I haven't looked at it recently. I think it's north of $150 million worth of Bitcoin in it. It's got a really big. That's just the insurance fund. That's never mind the hundreds of millions in profits that Arthur's printed since over the last 18 months specifically. So.
Sorry, what's it? Arthur
Hayes.
Arthur Hayes.
Yeah.
So is that sustainable? I mean, if you look at classic securities exchanges and so on, there must be a compression of margin at some point. When is that point going to happen? Yeah,
you're seeing that for sure, which is why, every exchange is, trying to launch their own token. Yeah, I think the American exchanges that don't have their own token are at a significant disadvantage relative to the ones that do, because you can just do. I mean, look at what CZ's done from a BNB token value accrual perspective year to date. I mean, the guy is on a tear for doing things that are valuable for BNB. And, I think he's entered into, with BNB holders, I think he's entered into a social contract as well there too, which is sort of you can trust me to run as hard as I can possibly run in as many different directions as possible to do things that is going to make BNB token valuable. And that means that you can book plane tickets and hotels with BNB. You can buy a house in Australia with BNB. I'm going to set up fiat exchanges in as many different jurisdictions as I can, and the only gateway is going to be through BNB. You're going to, if you want to be on Launchpad, you're going to have to, you have to hold BNB to participate on Launchpad. He's launched his own BNB chain. He already talked about he's bringing 8 ERC20 tokens onto the BNB chain, or the Binance chain. The Binance chain is going to be faster and you're not going to have gas problems the way that Ethereum has gas problems. And all of these things that are beneficial to the value of BNB as a whole. So it's no wonder at all that BNB's up. I think it's up 200 and something % year to date.
It's $19 this morning.
Yep.
I think January was $4 or something. It's $4, I think it was. So yeah, not a bad run. I was looking on Ikigai, and I noticed that you also have a publication, an educational.
Khanna
Katana.
Yeah.
Now, the logo is the brush and the sword, and I haven't had a chance to go into it yet. But I was wondering, if you could give us some insight as to what you're expecting to accomplish with Khanna Katana.
Sure.
What the genesis of that was.
Sure. Yeah. Great question. Glad you brought it up. Khanna Katana, Japanese for pin and the sword. Words and actions.
Right.
As you can tell, we're a pretty big fan of Japanese culture.
Sounds like it.
Yeah.
Why don't you open an office here?
I would love that, and I would consider that a long-term goal of Ikigai for sure. Specifically with Khanna Katana. So maybe taking a step back, one of the most refreshing things about being an investor in this space relative to traditional asset classes where I came from is how open the community is and how conversational everybody is. And we're all trying to crowdsource the truth. And, in my old line of work, some of my closest friends were money managers, guys I'd known 10 years. And we would talk all the time, but we didn't specifically talk about sort of the manner in which they went about trying to make money or the manner in which I tried to go about making money, because it was treated as a trade secret, right? And we certainly have trade secrets as well too, and sort of alpha generative things that I don't want to talk a whole lot about. But I talk to hundreds of investors on a daily basis, right. And the sort of most thoughtful folks in this space, we have clumped up together to try and sort of crowdsource the truth, and instead of trying to box out other investors that are trying to crowd your returns, everybody in this ecosystem has a general feeling that if we can get this thing right, if we can build this right, and figure out how to capture the potential, the incredible magnitude of the potential of this technology, that we're all going to make a fine living, and it's going to be fun. Everybody's going to be great. So you don't have to be so selfish and hedge fundy about all this sort of stuff. So with that being said, we think that the model for investors in this asset class is just going to look different than it does in traditional asset classes. And one of the main things about that is going to be education. And we talk a lot about being shepherds of the technology. I feel like I'm obligated, Ikigai's obligated, my partners are obligated to tell the world why we think this is so important and why we think that it's going to be a tremendously big deal over the next couple decades. And so we're not going to stop that educational process, and we want to figure out the best sort of venue to do that. But then you also have to be careful as a fund that's actively raising capital. You have to be real mindful of regulations around general solicitation and what you're talking about fund specifics and things like that. So in order to sort of separate those two things, Ikigai the fund and Ikigai the trade name for a group of advisory and consulting businesses that are run by Travis Kling and Timothy Lewis and Anthony Entman, that wants to tell the world about all the exciting things that are happening here from our own unique perspective. We've created Khanna Katana, and have a number of different information that's put out there on a regular basis. Something that we have not publicly put a spotlight on is I write a monthly update letter that goes out the first of every month to current potential investors. I've had a lot of people ask about that. So we've started putting out on a 1 month lag my monthly update letters. So I haven't really told the world that it's kind of out there. They're tremendously in depth. They're about 3,500 words each. They're real meaty, but they're on Khanna Katana. And then the other thing that we did tell the world about that got like incredibly positive feedback was the Valuation Depot, which is a collection of what we consider the most impactful sort of work done to date on fundamental valuation for crypto assets. And I think for people that are not super close to this ecosystem, a lot of those people would say, oh, there's no such thing as fundamental valuation for crypto. And we think that's just patently false. It's a nascent field of study, but it's also incredibly fascinating. And we've made significant strides. And there's a bunch of proprietary stuff that Ikigai has that like we're probably not going to publish, or we're not going to publish anytime soon. But what we've done is because I've spent and look, my whole career was in valuation. Like starting from the time I was 19 years old. I took my first upper level finance class my junior year in college, and I pretty much just have been valuing shit since then, right? Did it in a bunch of different asset classes, did it up and down the capital structure, did it highly liquid things, did completely illiquid things. And so it's valuation is a topic that's near and dear to my heart. And so I've poured over the material that's been written on fundamental valuation. And it was incredible to me that if you just Google crypto valuation or Bitcoin fundamental valuation or some combination of words like that, there was no depot. There was no central repository for all the different interesting things that had been written on this. So we wanted to provide that to the ecosystem. And I talked to all these guys, the Kritz Bernitskys of the world, Willie Wu, Murad, David Powell, Nick Carter. All these guys I talk to on a regular basis, they're doing fascinating work, and so this is just a depot of that to kind of give to the world, and we hope it's a big resource for everybody.
I noticed you mentioned your college days, and I know you went to Texas A&M. I was just looking at CNBC, and I noticed there's 196,000 gain in the non-farm payroll. Has Johnny Manziel impacted that at all?
No comment on Johnny Manziel. I don't even keep up with that guy anymore, to be honest with you. It was I was living in Chicago when he won the Heisman, and living in Chicago and going to Texas A&M. A&M was like sort of like the other football school in Texas that wasn't A&M, that wasn't UT to most people, sort of in the Midwest. And then obviously sort of Manziel brought sort of big time national prominence.
He put it on the map. He really did. Yeah.
I mean, there's a lot of old A&M guys that would take exception with that, but I mean, the punchline is we sucked for a long time before he came there, which was like when I was growing up there, we sucked most of the time. It was really embarrassing to kind of have him bring such a spotlight to where I went to school, and then have him flame out in extremely public and spectacular fashion.
It happens. It happens.
But I'm going back to A&M in a few weeks to go see my family, and I'm meeting with A&M's endowment, and also speaking to like a couple hundred kids in the business school about crypto, which I'm like really, really excited about that. Very
Norbert's
excited.
sitting here listening.
Lost the German with like U.S. college football here, but Johnny football is still rings a bell.
Johnny, wow, that's impressive, Norbert.
I want to on that kind of analytical framework and the approach to research. You seem to have a very differentiated view on kind of based on the in-depth analysis that you've done. I think we had like Tommy Lee coming through here a few months ago. Does this twice a year because he's got the research partner.
Funstrat, Tom Lee? I know Tom. He's a friend.
And so I wouldn't say that I don't know him enough to say that's like his main thrust of research, but he was trying to make a point to say that if you look at consumer goods companies in the 80s and you put your money in the top 100, and you look at internet companies in the late 90s, early 2000s, you put your money in the top 100, you would have made fortune regardless, right? And so the argument was a bit obviously to say if you take the top 100 coins and you put your money in now and you look 20 years later, you will have done fine anyway. And it's a bit the dumb approach or the low effort type of investing. Is that something you would see as well? Is it simply not intellectually kind of rigorous enough for your approach?
Good question. So I think what you're referring to is kind of the beta value creation of crypto. And like crypto is going to be the best performing asset class over the next 10 years. I mean, I'm like highly convicted of that. It looks like it's going to be the best performing asset class of 2019. When you take into account even the tremendous drawdown of 18, if you loop in 17 or 16, like you can pick a bunch of different sort of look back periods, and it has sort of been the best performing asset class. So when people ask me a lot, like how should just people get exposure to this asset class, people that aren't super wealthy and things like that. If you're an accredited investor, I would tell you put it in a fund. Right. I'm biased, but that's what I would tell you. Right. If you're not an accredited investor, I think the Bitwise index fund, I think their minimum investment is like $10,000. I think, that strikes me as a great way to get exposure into this. Or I think Coinbase has the sort of that weekly buy mechanism, and I think you can spread. I believe you can spread that out across the names that are on Coinbase. That'll give you some diversification. I'm fundamentally pretty overweight Bitcoin. I've been saying for over a year now that I think the value proposition for BTC relative to its status quo, which is gold, is much more. It's much better understood right now than any other crypto assets value proposition is relative to its unique status quo. But I'm not a maximalist. I do think money is the killer app for distributed ledger technology right now. And so I think and the total addressable market is enormous. The world's ready for it now. You look at what's going on with central bank and government, monetary and fiscal policy. The world needs what Bitcoin is right now.
Well, there was an article. I'm sure it was in the American press. It was in the Japanese press here in the Nikkei, and it's basically Trump is telling Powell to lower interest rates.
Yeah.
And he's talking about putting Herman Cain and Stephen Moore on the Federal Reserve Board. Yeah. I don't recall a president who has been so direct in telling the Fed what he thinks what they ought to be doing. He challenged them in, I think it was in January, December, and basically said, don't raise rates again. And now he's actually coming out and seemingly very forceful, saying it would be a good idea if you actually lowered rates. Yeah. How does this enter into your thinking or your views, just to pick up on what you had said?
Did you see Stephen Moore? Did it make it in the press that Stephen Moore was lobbying for his Fed position he was in the New York Times saying that if he got the position, the first thing he would do is demand a 50 bips rate cut. So he's hand waving to the president saying, if you
Pick
get
me.
me in here, I'm going to lower rates. I cannot tell you how bullish that is for Bitcoin.
Yeah.
I cannot tell you.
Yeah.
Crypto is a risk asset.
Right.
Specifically, Bitcoin, though, is a risk asset with a specific set of investment characteristics that become increasingly more attractive the more irresponsible monetary and fiscal policy is. Bitcoin has gone through a number of different identities over the 10 years. It's like a kid in junior high, right? That I went through this phase where I was like wearing baggy jeans and whatever. Like a Nirvana t-shirt.
Before my time. I didn't go to school when they were wearing baggy jeans, but
but Bitcoin has gone through some identities, and remember like 2 years ago when Bitcoin was going to go to the moon because it was going to let you could buy a cup of coffee with Bitcoin. Remember that?
Yeah.
Like that was why we needed Bitcoin, right? Because it just wasn't working in America to buy coffee. It's too hard, right? And that's obviously a silly concept. Bitcoin is a global, immutable, decentralized, digital, non-sovereign, hard cap supply store of value.
Right.
That's what Bitcoin is.
Yeah.
And it is an insurance policy against the largest monetary and fiscal policy experiment in human history, which is globally coordinated quantitative easing while simultaneously running massive deficits on top of an increasingly untenable debt level. And that's not hyperbole to call that the largest monetary experiment in human history. That is unequivocal fact. And we've been going down this path now for 10 years. And the Fed, starting in 2017, tried to get us, wean us off of the drug of cheap liquidity, started raising interest rates from obviously zero. So you're starting at a really low base. And roll off the asset purchases, and then start to actually roll off that balance sheet that had ballooned to $4.5 trillion or whatever. And starting in 2018, risk assets started rolling over one after another, and that was punctuated by the sort of dumpster fire Q4 18 that we had for all risk assets.
Right.
That Q4 18 punctuation was punctuated by Steve Mnuchin calling the plunge protection team on December 24th.
Right.
And if you look at a chart of just about any risk asset, that was the absolute bottom dollar of the meltdown.
Right.
And we bounced hard from there. Mm-hmm. And the last day of January, right? So December 17th, Jay Powell, autopilot, remember that?
Yeah.
Jay Powell talking about the balance sheet roll-off is on autopilot. And the market really didn't like that. Trump's on Twitter talking shit, blah, blah, blah. I mean, market didn't like it. Trump didn't like it. Plunge protection teams called. Market rips back higher. All the other central banks start talking dovish. They're talking dovish. People are starting to expect, you've got what's his name? I'm drawing a blank. Druckenmiller, Stanley Druckenmiller, one of the best investors of all time.
Right.
He's saying this is an enormous mistake. Jeff Gundlach sitting there talking about this is an enormous mistake. Last day of January, FOMC statement, complete dovish capitulation.
Yeah.
Complete U-turn from a tightening and hawkishness and rolling off the balance sheet to full accommodation by any means necessary in a decidedly dovish stance. The price of Bitcoin has not been lower since then. Yeah. That was the last day of January. February 8th, LTC ripped 30% in a day.
Right.
And we have not looked back since that. The market structure for crypto changed on February 8th, 10 days after that meeting. Yeah. And then Jay Powell went on 60 Minutes on March 10th. Yeah. Confirm that dovishness, in a 60 Minutes type of fashion. And
Is that the one with Yellen and Bernanke were sitting beside him?
Yeah, I think that was a different one. I know which one you're talking about. Yeah. And then March 26th, next FOMC statement, further confirmation. And then in the meantime, you've got the ECB, the BOJ, the PBOC, Reserve Bank of Australia, Canada, everybody falling in line. And there's a spectrum of dovishness, and all these central banks are sort of lining up because nobody can be too far away from anybody else, right? Sure. And ECB's sort of the furthest out there because they're the most screwed, right? They're the most screwed.
Oh yes.
The euro as a currency is it's only 7 years older than Bitcoin. I actually love that.
That's an interesting. I hadn't
I
thought of it
love
that.
But
You're absolutely right.
That's a great framework, isn't it? Yeah. The euro is 7 years older than Bitcoin. What do you really want to bet on lasting longer? Yeah. What do you really want to bet on, right?
Yeah, it is getting to that point.
It's a very bullish view, obviously, and if you manage your risks well as you do, you also think about what are the risk factors that ultimately could lead you to change kind of that bullish positioning. Is there anything that you see that possibly, if this scenario evolves, that's kind of where I change my view and I decrease Bitcoin exposure or get out of Bitcoin completely? What would that look like?
Sure. So like I said, crypto's a risk asset. So to the extent that don't fight the Fed. You've heard that meme. Don't fight the Fed, right? That trade's been working for a decade, over a decade now. You put that trade on. It's a really straightforward trade. Don't fight the Fed. You put that trade on over a decade ago, and you go play golf. You've made tremendously good returns. And crypto is an extension of that. So to the extent that you start, if central banks kind of tighten back up, the market cap of crypto as a whole is going to go down. Prior to the capitulation that you saw at the end of January from the Fed and echoed by the other central banks, prior to that, we thought $2,000 BTC was totally on the table, totally on the table. And in my monthly update letters, there's a real clear cadence of like our bearishness, and then they go out the first of every month. So then Feb 1st, I said, okay, the Fed just did a thing, and this is a big deal for crypto. And then by the time March 1st came out, I said, okay, this market just started acting really differently because of what just happened. So Jay Powell put the bottom in the crypto market. Sure. So to the extent that they do some things that are bearish for risk assets as a whole, crypto is going to be affected by that. Specifically for Bitcoin, the tail risks there are, I'm less concerned today than I was 6 months ago, but I'm still concerned about the how centralized proof of work mining is. Kind of the dirty little secret that Bitcoin maximalists don't like to talk about, right? When you had Bitmain prior to the Bitcoin Cash, hash war, hard fork, that whole situation that crashed the market in mid-November. I thought it was quite bearish that Bitmain was as big and as powerful and as seemingly not good for the ecosystem as they were. And through that hash war debacle, the fact that Jihan Wu is no longer running Bitmain and that their significance to this ecosystem seems to have been materially diminished. And, I don't know what's going to happen with ABC and SV, but, all of the clowns that were involved in that whole debacle have seen their ability to affect crypto as a whole materially diminished. That's deeply bullish. It's deeply antifragile. That's what's so fascinating and bullish to watch, because it is so hard to find any antifragile assets anymore because they've been so distorted by central bank quantitative easing. Sure. It's in the same way that when an astronaut goes to space and isn't affected by gravity for an extended period of time, and they come back. You've seen those pictures before. Sometimes they got to wheel them off in a wheelchair because gravity has done such a detriment to their muscles. It's the exact same thing with risk assets and quantitative easing. Right. And Bitcoin, that ability to kind of shrug off one of the what I thought was one of the large sort of negative aspects, which was, Bitmain's prominence in the ecosystem, that looks to be diminished now. It's great to see that. Look, you can always. I'm trying to come up with other bearish things.
No, I remember when the quantitative easing policy started. I can't remember if it was 2009, 2010, but I do believe it was after the Nakamura white paper had come out, and they were talking about. And I remember the night before the first round was going to be something in the neighborhood of 500 billion. And I used to talk to a lot of U.S. government bond traders in Tokyo in my previous job. And my first thought was, this is not going to end well.
Yeah.
Okay. But their attitude was, hey, this is some money for the boys.
Yep.
In a lot of ways. So it just didn't leave me with a comfortable feeling.
Yep.
So anyway.
I think we started kind of with a social component, right, where you said the world doesn't need another hedge fund manager, but the world needs this technology. So maybe we end kind of with a question on the social side as well. So when you think about the programmable money, and I put this in the context of China, where you also have this social reliability score already, and if you don't kind of behave like the government wants, then you're already not allowed to travel freely. But once that money can be switched on and off in people's wallets, there's really not much that prevents the government to basically switch off your money supply instantaneously. And that's kind of, it's a Goldilocks scenario of cryptocurrency, which we talked about a lot, but that's kind of, it's a bit the horror scenario of what an authoritarian regime could kind of do with that technology. And how do we, again, as a global society, make sure we're getting towards a good outcome and not the bad one?
So I use this term, and I came to this conclusion very early on in my going down the rabbit hole, like months before I left Point 72, within the first couple hundred hours of research that I was doing. This is part of what I call the trust revolution. Which is a bit of a woo-woo term, but I think it's really, really important. And distributed ledger technology and crypto assets are at the absolute epicenter of it. So when I was first kind of really going down the rabbit hole in summer 17, and sort of understood the potential of the technology, the next question I needed to answer for myself, which was equally as important, was does the world care about it? Does the world care about it? Because I think there's a lot of, you come across a lot of what I call techno-utopians that are in this space, which are like these people that are like, if we could just use the technology for its intended, all these good technologies, the world would be such a better place. And they're probably not wrong, but their stance on technology adoption like flies in the face of human nature and the way that humans kind of work. Humans are like, they're kind of sheep, to be honest with you. And I don't mean that in a detrimental term. It's just people get in their grooves. They want to be comfortable. They don't like change. Disruption is like not something that most people want to sort of face on a regular basis. So I asked myself, like, is the world actually going to care about this stuff? And what I saw was a set of social circumstances that had a common underlying current to them, and it was Brexit and Donald Trump even getting elected into office in the first place, and Russian Facebook election ads, and Samsung bribery, and NSA spying, and Black Lives Matter, and the Me Too movement, and Cambridge Analytica, and a bunch of other things. There's a commonality across all of those, and it can be summed up as power tends to corrupt, and absolute power corrupts absolutely. And millennials,
power is derived from the barrel of a gun.
And you can just look at surveys, and millennials feel this much more acutely than older generations. Millennials are the generation that think all politicians are crooked, Wall Street is rigged, and big tech companies take my data and they do bad stuff with it, or they don't keep it safe, or they sell it and they make a lot of money, but I don't really get much in return for that. The world is really beginning to recoil from that type of behavior, and you're seeing it time after time after time. I think younger generations they feel this more acutely, and so as that generation gets older and moves more into power, I think there's going to be a demand for a better way to be able to just democratize that, because in so many of those instances the system appears to be so broken. The political system in the United States is so obviously broken right now, and this trust revolution is part of it. The definition of the word trust is going to change drastically over the next. It's changing right now. It's going to continue to change, and it's going to look totally different 10 years from now, 20 years from now. And the same thing with the word truth. Truth, the concept of truth is, look at what our president does with the concept of truth, right? And what example is our president? And I'm not going to get into politics or whatever, but as you can probably guess, I'm just mostly a small government guy. But the guy has sort of taken this concept of truth and warped it in such a crazy way. And in the very near future, technology is going to allow. We're going to have to change what truth means entirely, because you're going to be able to take technology and create a video of Travis that looks exactly like I'm saying things that I never said. Or you're going to be able to take my voice and make it say things that I never said. Yeah. So we're going to have to figure out a way to find a more reliable source of truth. And this world isn't going to let it come from centralized organizations, because we've seen it fail too much. It's failed too much. Distributed ledger technology is the platform to go drive societal change for the good, to provide an answer to that. And that's tremendously exciting. And that's something that I want to spend the rest of my career and the rest of my life trying to push forward. So
wonderful. That's
very
a
interesting.
very, very good way to end this. So thank you very much, Travis. This was our second Tokyo FinTech podcast with Travis Kling, founder and chief investment officer of Ikigai Asset Management. We're signing off from the TeamZ Blockchain Summit. My name is Norbert Gierke from Tokyo FinTech.
And I'm Scott Gentry from Brave New Coin. See you soon.
Thanks a lot for having me.